Welcome to the chart. So for the monthly market outlook, we are going to be taking a look at the probable direction that the market is going to follow for the month. So right here we can see we are currently on the daily chart, and as you can see, this period separator, this is a month, this is this month. So let us take less than a minute to explain what we have right here in front of us for the sake of beginners, so they can follow us on this and they will not be left behind. As you can see, price rallying up, creating series of lower highs and higher highs, and a cluster of green candles. These green candles, let us mark them in a box. They signify buying pressure. While as you can see, price consolidating within this range, tickling down to this point with a cluster of white candles. These white candles, they signify selling pressure, while a candle that has neither color, that is neither white nor green, like this candle right here, signifies indecision in the market. So at all times, as traders, we need to be strategic with making our decision, and we need to always follow the intelligence of the market. The intelligence of the market is encoded in the candlesticks, telling us at all times what price is trying to do. And as you can see, this candlestick, you have this wick. At the top you have the close, at the bottom you have the open, and here you have this wick as well, which is the low. And for this sell candle, at the bottom you have the low, at the top you have the high of this wick, at the bottom here you have the open, and here you have the close. So those are all we need to understand, so we can know what we are going to be doing right here. So for the monthly market outlook, we are going to take a look into the probable direction of the market, and what we want to see for the previous month. We want to see a trend, and the coming month we want to see a reversal of that trend, that is the trend going in the opposite direction. Let us take a picture perfect example of what we'll be looking out for, so we are going to know what we are going to be anticipating in advance. So right here we have this month is in a downtrend, and we have the sellers here, and you can see the market came to this zone. And when the market came to this zone, not more than two candles close here, and you can see the market bought. We need to keep two concepts in mind. The first concept is that the market sells to buy and the market buys to sell. Why does the market do this? The market does this because forex trading is a zero-sum game. So for buyers to make money, sellers need to lose money on the other side, and for sellers to make money, buyers need to lose money on the other side. So not everyone wins. Some win, some lose. Some lose, some win. That is the nature of the business. So right here in the market mechanics, we want to see the sellers that will lose so we can buy. Likewise, we want to see the buyers that will lose so we can sell. So we are always strategic in positioning and putting ourselves ahead of the head. So likewise, if it is a buy, we want to see an uptrend, and what we want to see a reversal. Mind you, at the low we must always see a sell candle before we consider it a zone to look out for at all. And also at the high we want to see a buy candle before we are going to see it as a zone we are going to look out for. So let us get to the business of the day. So we can see Euro USD at the past month, at the low we have a sell candle, at the top we have a buy candle. So right here we can see price consolidating within this range, so we expect price to draw up to this high, take it out with not more than two candles closing above. Then if all rules are met, you can expect euro to drop further down. However, for now price is in a consolidation, and we expect it to either draw to this high or draw to this low. That is the beauty of the market mechanics. The market does two things: either the market buys up or sell down. So whichever direction the market is going, we always have a game plan ahead. So right here on AUD USD, as you can see, we do not have a buy candle at the high, we do not have a sell candle at the low, so we ignore this particular pair, looking at the directional bias for the month. On GBP USD, we can see that at the high there is a buy candle, and at the low there is a sell candle, which is beautiful. So we expect the high to be taken out with not more than two candles, and then a reversal to the downside. Likewise, if price draws to the low where we have a sell candle, we can expect it to be taken out, then a reversal to the upside. However, this high here, we expect price to draw to this high, give a reversal to the downside, as currently price is in a consolidation. For AUD JPY, we can see this is a beautiful picture perfect example where we can see at the high we have a buy candle signifying that sellers are in danger, and right here this zone is broken. So if no more than 2 candle closes and price come back within this range, which you can expect the Australian dollar to weaken further down against the Japanese yen. Nevertheless, in the low we do not have a sell candle, so we ignore looking out for a reversal at the low. Here we do not have a buy candle at the high, we do not have a sell candle at the low, so we ignore. The beauty of the market mechanics, you know which pairs to ignore and you know which pairs to give attention to. On Euro JPY, we can see a buy candle at the high, and at the beginning of this month when price came to take out this high, we can see that price dropped down. However, price is rallying up, and if price closes more than 2 candles above this high, we can expect price to continue riding higher. However, if no more than 2 candle closes, we can expect the downtrend to continue in advance. On AUD card, you can see some beauty right here. At the perfect low, there is a sell candle and it is taken out, and you can see what happens once it is taken out. You can see a reversal to the upside, and price is going to the upside because this low has been taken out. However, in the top there is no buy candle, so you can see this is a picture perfect of what we are expecting. And as you can see, not more than 2 candle closes, and you can see the sellers here are losing money and these buyers here are currently tanking in profit. On gold, no buy candle at the top, however a sell candle at the low, so we can expect price to drop to this low, grab liquidity. No more than 2 candle closing, and we can expect a strong support to be formed for price to ride higher. On silver, no buy candle at the high, no sell candle at the low. On GG, we can see a buy candle at the high and it is taken out currently, so if not more than 2 candle closes, we can expect a reversal to the downside for this trend to go in a downtrend. So those are our expectations. On USD no, there's a buy candle at the high, so you can expect price to ride to this high, take it out and draw further down. On BTC USD, no buy at the high. Okay, no, there's a buy at the high, however it was taken out and more than 2 candle closes. We can see at the beginning of the month when price took this out, you can see that price went in a downtrend before price went up and more than 2 candles closed above. On DXY, you can see a buy candle at the high, a sell candle at the low, so you can expect price to come to this low, take it out for the DXY to buy further up. Plan your trade your plan, and most importantly, manage your risk and emotions. If you find this useful, like, share, subscribe and follow for more.